Good morning, traders, and a very happy Monday out there to everyone. Hope that you all had a lovely weekend there in store and are all ready for this nice week in front of us here. This will be our third week of November that we'll have in store here, so we'll have that to consider. But outside of that, we know that we have the bulk of our earnings certainly out of the way. And as far as our data goes for today, starting off the week, we are nice and light on the economic calendar for today. In other words, we don't have any major U.S. Figures set to be released this morning. It does actually appear that you have a bank holiday over in Canada today in honor of Remembrance Day, supposedly. So Canada, might be a little lighter on the movement out there today. But outside of that, like we said, nice and light for the U.S. side of things. You have FOMC member Cook set to speak at 8:50, but really that's the only item there on the board. So with that said, we can come over here and start to jump into some charts here from our action there last week, including the data point from Friday, where we had our nice outside up range expansion bar closing back on the other side of the daily 5 SMA. We did get ourselves marked up fairly well because we put in a high of 44.3550 with our previous little congestion zone that we had built out from our middle of October. We had 44.3050, so we were able to trade on the other side of the top of this previous range there on Friday's trading. So we have that going for us there, with the previous day's high being 44.3550. Overnight, we did keep it contained. In other words, we did not trade outside of Friday's bar, so we still have an inside range bar in the Globex session. However, just to keep it on the sheets there does not mean that we have to go out there and, assault it right away. 44, 43, half will be the remainder of the pit session gap area that we had from the trading on September 20th to September 21st. So we had left a gap in that area from space to space. We did some testing here during that consolidation phase, and then Friday we had our good range expansion bar and did some additional testing. Just did not quite fully fill the gap, right? So our high once again 44.3550, with the gap fill being essentially at 44.4350. So only a partial fill so far for that ES, so we'll want to keep that one in mind during our pit session hours today. Outside of that, since we did have fairly good trendiness, or good range expansion on Friday, wouldn't be too uncommon for us to put in some consolidative work, in the early morning session. If I were to grab our slightly higher time frame, such as the 240-minute display, not too much shifts. It's the same feeling of big previous congestion zone, the fact that we were able to look above that for now, and we're just kind of maintaining and holding ourselves at the upper end of the range. So we'll have that going for us. As far as major zones of caution, it's a ways down there, 43.54 and a quarter, which was our little intraday low from the tail end of last week. So obviously have been leaving that behind. In other words, we have not been trading back towards that zone. We had our good range expansion or impulse and just hovering and holding above most of that data there from the trading done on Thursday's action. So not too shabby. That's where we stand on the dailies as well as the 240-minute. As we come down, always good to be aware of just on these slightly lower time frames. If we just look at something like the hourly, it's going to show the feeling for one, where we know we had our higher low, so that helped stem, some of the progress here for our better range expansion to the upside. So we've been forming, more or less, an hourly bull flag that's already working on getting a partial retest up. So, in which case that Friday's high would be quite important, and a bit more of an intermediate level where we perhaps would be a little more cautious with the market is if we came in here and failed to make the full retest up, which would be perfectly fine. But this 44.08 half, if we were to come down and breach that, be a little bit more cautious, just because that would give us that feeling of failure to make the full test up and then hitting the U-turn point. But we'll want to take this one step at a time. For now, they're maintaining it. We're kind of watching these hourly charts just to see as to how much further, if at all, we want to reach there as far as our S&Ps go. So that's our daily coupled with the 240-minute and the hourlies. And then we can come over here and take a peek at the DAX. The DAX has been quite a lot more tame as of late. However, what we might want to note here in the DAX is that sneaky, but we have been working. We already had this in the S&Ps, but in the DAX we're still working on the closes on one side of the 5 SMA. So we have our 1, 2, 3, 4, 5, 6, 7, 8, 9 on the close Friday closes on one side of the 5 SMA. So we'd want to keep an eye on that value here today because we did test beneath it overnight. That comes in at 15.314 in the case of this DAX future here. So playing nicely inside of yesterday's range for the time being there. They did give it a test in the overnight session, but didn't get too far going. So we have a decent area to roam there. 15.389 being Friday's high and 15.228 being the low from Friday's trading. So it gives us a little region for us to kind of play back and forth between, and a breach on either side of those zones should generate some additional interest. So be keeping an eye there on that DAX future. Then we'll want to pull over our currency group here. Like we said, it does appear that Canada is on a mild holiday, so it might be slightly tame for the currency spectrum. But we do have this EC positioned in a curious location, because recall that not from last Friday but from 2 Fridays ago we had that nice range expansion bar out of that 3-bar balance mode, and then essentially we spent all of last week kind of coming in and consolidating a good portion of that bar, which we have not traded back on the other side of. The bottom of that big impulse bar is at 1.06330, so we're doing a fairly decent job of keeping things maintained for the time being. We have a big previous congestion zone, or you could envision it as being a fairly decent volume node that looms down below in the case of the EC. So for now, they're holding their ground or maintaining. However, as we come down to the intraday charts here, such as the 120-minute display, that's going to show that same feeling of the large impulse bar. So we can see that we've been certainly spending a lot of time, filling in, putting in some more work there. So I have a yellow line down below, just in case we were to slip down outside the range, 1.06660 for the euro currency, because that's the bottom of the large impulse bar that we had. And then on the flip side, obviously we haven't given that a test either, but 1.07215, just simply because that was our nice cycle or reaction high that we had before then giving our better impulse action there on the trading from last week. So 1.07215 up above, 1.06660 is more of like a caution area down below, but plenty of areas we can see for the euro currency to kind of come in and rotate. Several tests on these tails and data points that we have all throughout this region, so not a bad look there for the euro currency. And we could see that we had a couple low developed areas along the way just from these little blue boxes. In other words, we had rather impulsive action, up through, sideways action, little shake around, and then in another case of impulse back down through that area. So not a whole lot of trading has been done through those zones, so that's kind of what we're building out in a little bit more detail there for that euro currency. So like that hourly or 120-minute display in conjunction with those daily bars there. But that's that for the EC. And then we have the GC here opening up with a little more rhythm here on both the dailies and the 240. What we saw last week on the gold was the fact that we came back below. If I were to grab our dailies for starters here, we can do away with the yellow line. Obviously, we've breached the caution zone. But here on the gold, remember our large range expansion bar from October 13th, October 12th and 13th being fairly significant days for a few of the markets there, including that of our index futures. But here in the gold as well, that top of that bar was at 1946.2, so we did not only trade on the other side of it, but closed on the other side of that data point there from Friday. So where we're starting to come back down towards is where we had formed some balancing act prior before giving our second round of range expansion up in the gold. So where we stand on the dailies, obviously previous day's lows pretty darn close, 1936.9. So it's essentially, gave that a test in the overnight, but proceeded to hold above it briefly. So we have an inside range bar in the overnight session there. So where we stand on the dailies, slowly, working back to our towards our initial starting point before giving our second round of range expansion up. But what's nice here on this intraday chart with the gold, our 240 minute display here, really shows the nature in which we've been kind of unwinding here. A bit of the rounding action up above, our basing action with some slightly lower highs. We had one lower high, two lower highs before then, of course, taking out the 1980 and proceeding to get some better action going. But here with the gold, what I wanted to bring to the attention here is, for one, we have these two nice cycles here, 1924 in that general area, from two separate occasions where we had found a little footing, or at least some pausing action in the gold. So here's the 1946. This was from the dailies, right? The top of that daily bar from October 13th. So we traded, or trading, on the other side of that. So still, watching that as being a point of interest. What we do not see forming on the gold as of yet is looking down here at the positioning on our oscillator, right? This 240 minute oscillator. If we recall, we know last week we had our feeling of the buy divergence here on the oscillator, which had already reverted back up and tested its 240 minute moving average. So this is a separate swing down. So we did obviously take out that low and have been maintaining. So now we can see we don't have any signs of major divergences or loss of momentum. What we've been doing instead is kind of building out ourselves a bit of a sideways line on a lower time frame, like the 30-minute chart. After having the selling pressure there on Friday's action, we've been kind of digesting by going sideways there as far as the gold goes. So some nice points there once again. Back below this 1946.2 general area. And then, this 1924 is a ways down there, but at least gives us a bit of a region or a window there for the gold to play inside of. But it's nice to, it's been a process there. This gold's had some good swinging activity, but all this work that we had put into the upside, our 3-bar balance mode, our slightly lower high, and then lending itself to, a little bit more of a, deeper pullback. And just one other thing, we blow this up a little larger here on the dailies, and we can see that we've spent a good amount of time in here. We came down, formed our little balancing act, traded back up through it, put in another 3-bar. So it's not like we haven't spent a lot of time in this zone. It's just a matter that we departed from it there during the trading from last 2 weeks ago, and now back to the general starting point again. So a lot of work's been put in around this 1938, 1939 zone there in the gold, if looking at the daily charts and just blowing them out there just a notch. So that's all fine and well. We'll get this a little blown up a little larger, and then we can move on to that of the CL here, the crude. The crude had put in itself a better showing there on Friday's trading, right? We had that nice higher low that started to take place. So we did proceed to blow this up just a notch here. This was our 2-period rate of change low readings that we had, right, on the trading done on Wednesday, right? So lent ourselves to a consolidation day on the day following. And then on Friday, we had a pretty good showing in terms of the low to high. We did close briefly on the other side of that 5 SMA, 77.31, which also coincided with a little close above the previous day's high, or Thursday's high. So not too bad on the crude. We held slightly higher lows, so we're not necessarily out of the woods or anything by that means. So what we did do is close on the other side of the 5 SMA. Not quite the extended run, and we didn't quite form the balancing act either. So we'll really want to keep an eye between this previous day's high, or Friday's high, 77.73 there, and this 5 SMA, which comes in at 76.59 there as far as today's trading. So those will give us some decent windows to work with there in the crude. That's just on the daily. But when we come over here to our intraday display, whether you're looking at an hourly or 2-hour, either way it's going to show the feeling that we just held short term, one higher low from last week, the 2 little tails that we left on the daily bar. So having some counter reactive lift. However, here with this crude, That previous day's high, 77, 72 will be quite important. Getting on the other side of that zone, and what we'll be dealing with is some of the selling pressure that we had there in the crude. So not a whole lot of development was done in there. So any testing above that previous day's high would put us back inside of some of that selling pressure that we had there with the crude. So that'll be a point of interest up above. It might serve as a bit of a hurdle on the initial test up, and then really all else aside, obviously the 74.91, the low from last week. We have a yellow line there in case this thing completely unravels and then starts to get some better resolution to the downside. But for now, they're working on with some counter-reactive lift, a bit of an A, B, C up on the 120-minute display, and just trading really inside of Friday's range expansion bar there for now. Our kind of first, this is the other thing to consider. It's not, major range of these red bars, but we did put in our kind of first pause bar of green after having, a handful of red bars down. So sorting themselves out with an inside range bar there so far in the crude for the Globex session. And then last but certainly not least here, the bonds. The bonds had also showcased some good rhythm there last week. And now we're keeping things, there we are, keeping things nice and tame in the overnight session there, just as far as the Globex goes. So bonds will be very interesting today. I could even come in here and mark this with a yellow line on the dailies as well. We already know off the bat that 112.12 was important there from last week's trading, right? Because we gave it the double test after the auction results and proceeded to hold. So here on the dailies, large range expansion bar down after having 2 days of low to high. So good range expansion bar down. However, on Friday, we were unable to trade back on the other side of that. So on Friday, we put in an inside range bar on those bonds. But still, this 112.12 will be quite key there for them in case they were to start to trade on the other side of it. That wouldn't bode very well there for the 30s. And if we come over to the hourly charts, we'll see that obviously the same feeling there as to where this data point came from. So 112.12, nice cycle low, and then the spike low that we had, I believe that was from the auction results. So that'll be well defined. It's a point of interest there for us at minimum. And then really outside of that, since we've been doing all this testing here and kind of holding, I just have the previous day's cycle high marked off at 114.01 there in case we were to showcase any strength and do any holding. That would likely serve as a little resistance area on the first attempt up. So with that said, I'm going to shrink these back down here, get our S&Ps loaded back up. Like we said, it's nice and quiet in the morning session here, no US data points. We do have a bit of a bank holiday over there in Canada, so currencies might be a tad on the more quiet side. And then outside of that, we'll have Damon with us in about another 25 minutes here with his market profile and his lay of the land there, so we can be all set to go here for this Monday here to kind of kick off the trading week. So I'm going to get a couple things back up and adjusted here, and we'll be sure to hop right back on if we have something nice and interesting lining on up for us here in this early morning session.